Hello, welcome back. In your previous lecture, we have learned about longer term treasury securities, and in this lecture, we'll cover bond market, everything else. So, what you will learn from this lecture? In this lecture, we'll mostly focus on main features of other types of long-term debt instruments. We'll mostly focus on corporate bonds, mortgage bonds, municipal bonds, and international bonds. So, what are the corporate bonds? Firms or corporations can also borrow directly from the public by issuing corporate bonds. So, corporate bonds are alternative of long-term bank loans for the corporations. Corporate bonds usually pay semi-annual coupon payments, and like other bonds, face value of the corporate bonds are paid at maturity to the investor or bondholder. The contracts of corporate bond is known as bond indenture. These bond indentures specifies the characteristics of bond, like what is the coupon payment of the bond, years to maturity, and so on. Corporate bonds are not risk free, so therefore they are subject to default risks, and credit rating of the corporate bonds are rated by rating agencies. There could be two types of corporate bond in types of default risks. These are invested grade bonds. Investment grade bonds are comparatively safer, and high yield bonds. These bonds are, that means the high yield bonds are riskier. And now let's look at different types of corporate bonds. Floating rate bonds. Coupon rate of floating rate bonds fluctuates depending on the market interest rate. So, floating rate bonds do not provide fixed coupon. Secured bonds are backed by the assets of the corporation. So, if investors invest in secured bond, they will be entitled to the corporation's asset if in any case the corporation fails to pay the principal amount or coupon payments of the bond. Debentures are unsecured bond, so debentures are not backed by any assets of the corporation, and subordinate debentures are less prioritized in case of liquidations and payment to the bondholders. I have already said you that high yield bonds are risky bonds, and as a result, these bonds provide more yield than secured bond. Callable bond. If bonds are callable, the issuer of the bond gives the right to repurchase the bond in future. Usually, issuers gives the right to repurchase the bond or the call feature if the issuer expects that market interest rate will decrease in future. So callable bonds provide more interest rate than other bonds to compensate the call features of these bonds. Convertible bonds, on the other hand, gives the right to the holder of the bond or investor of the bond to convert the bond to a number of common stocks. Now let's look at the asset-backed securities. Asset-backed securities are backed by assets. For example, mortgage-backed securities are also asset-backed securities. A simple mortgage-backed bond pays interest and principal from a pool of mortgage. Student loans and car loans are also asset-backed securities. Municipal bonds are issued by the state or local government. One of the important features of municipal bond is investors of municipal bond do not need to pay tax on the interest income of the municipal bonds. Therefore, investors with high income bracket usually prefer to invest in municipal bonds as interest income is tax exempt. Now, finally, international bond. If a US corporation issue bond in UK, that will be known as international bond. Similarly, US government can also issue bond in international capital market. Eurobonds, let's look at the Eurobonds. If a American corporation issue bond in an European country and if the bonds interest and principal amount is paid in dollar, that bond will be known as Eurobond. Similarly, if a Japanese corporation issue bond in Europe and the Japanese bonds in its bond interest are mentioned that bonds principal and coupon payment will be paid in yen. These bonds might be known as Euro-yen bonds. So, from this lecture, we have learned more about corporate bonds, mortgage bonds, municipal bonds, and international bonds. That's all about Module 4. In our Module 5, we'll learn about financial system and financial assets. Our focus will be on equity securities. Thank you.